Now, Teekay Corp is the world's largest oil tanker owner, held its investor meeting today in New York. The stock is trading a bit higher today, but has declined about 57% in the past year. Bjorn Moller is the CEO of Teekay Corp. He joins us now to discuss his outlook for the company and the industry. Bjorn, welcome to the show. Thanks for joining us.
Thanks, Matt.
Let me ask you about the main focus of today's investor meeting. Were you focusing on rates and the outlook for that?
We were mainly focusing on the fact that Teekay Corporation is trading at about 50% what we think is the true underlying value. And because we've been busy growing the company and created a potentially complex structure with 3 publicly listed daughter companies, it's been difficult for investors to follow along. And we have decided that we need to do more to be transparent and to talk about the detail of the valuation of our parent company, and that was what the purpose of this morning was.
Why don't you explain to us the strategic plan here? Because I was reading a note by Jonathan Chappell over JP Morgan. He says that you're having trouble dropping your assets down to daughter companies. Is that part of the plan? It seems odd that you would want to grow and still drop assets down.
We have built a structure where the parent company is acquiring platforms and making those platforms work, adding organic growth. And we've created 3 separately listed public companies that have focused investment objectives, depending on what kind of profile: 20-year fixed-rate LNG business, 3 to 5-year offshore business, and also the spot-related business in our tanker business. So we're basically adding assets through acquisition at the parent company, and we're packaging them and selling them down to the daughter companies.
Are you having trouble doing that, as this analyst notes?
I think the whole issue market became very difficult. We were well underway in 2008, and of course we hit the same brick wall that everybody hit in the second half of the year. It's good to see that the markets have in fact opened for Teekay again, and we've done 2 equity offerings so far. One in March for our LNG company, Teekay LNG Partners, and another one last week for our tanker entity, Teekay Tankers Limited. So we think the market's opening up, and I guess we'll just have to pace it according to what the demand is.
And you do continue to plan to grow as far as acquisitions, as far as new ships. How do you find financing as far as that goes?
Well, at the moment we are very focused on delevering our company to build further financial flexibility. We've been on a real tear. We've grown our asset base tenfold in the last 10 years, and with the outlook a little volatile, we're comfortable just pushing all the drop-down proceeds that flow up to the parent company, as well as our free cash flow. We're applying that to delevering the company to build further financial flexibility.
What do you think about the rate situation here? I mean, you had such an incredible rate situation last year, and then we've seen it come down substantially. Where do you think we are as far as where we should be? You know, you've valued your company. You think it should be worth 50% more. Where should rates be here?
Well, rates were very strong in 2008. You're absolutely right. And they got hit by the OPEC cutbacks of oil production, which took out 10% of demand from the tanker space. Now, so you have to wait for that OPEC oil to come back into the market. That's going to be driven by the economy. What we have seen in the last few weeks is a slight lower compliance with the cut. So OPEC is leaking more oil into the market. That's helping the demand side. At the same time, you're seeing a lot of tankers being used for storage of both crude oil and refined products. That's absorbing a lot of tankers. So we're actually seeing a real rebound in rates in the last few weeks, doubling or tripling from where they were.
Do you expect those things to continue? Only about 20 seconds left. Do you expect that to continue as the expectation going out further for oil prices remains at a higher price than we see now?
We expect volatility this year because of OPEC not being back in the arena. Next year, if they come back, then I think it's recovery time.
All right. Hey, Bjorn, thanks so much for joining us.
Thanks, man.
Bjorn Moller there, CEO of Teekay Corporation.